in my mind, there's no doubt that we will have $50 silver much sooner than most of us can even fathom, even realize. We got a big show today, a lot to look at that to me indicates to us we are in for good times ahead for the silver price and the gold price. We're going to do it all together. Don't forget, you can subscribe to the channel. That's free. Leave a comment in the comments section. I appreciate you being here. This is not possible without you. You choose to be here. I honor your time. Let's dig right in. So today, and we got a ton to cover, guys. So today, the big news story was inflation was up. What is it? PPI. That's making the silver price and gold price go down. Let's go take a look at the headlines coming out right now. Wholesale prices rose 0.9% in July, much more than expected. Yada, yada, yada. I mean, all this data, it's all suspect. We know the big picture. I want you to bookmark this because we're going to talk about this more later in the show. But the outlook for silver and gold long term, when I say long term, I mean the next month, year, 5 years, 10 years, has never been better. And we're going to look at the charts here next. But really, this economic data that they're putting out at us, I mean, unless you're one of the sheeple, right? You know, it's all a bunch of bunk. We got to keep our eye on the big, big picture. And when we look at the silver price and the gold price, which we're going to do right now, and we look at a chart of, let's say, 6 months and 5 years, it is crystal clear to me that we are heading higher and higher, right? I'm the guy who sat down here and had a blindfolded bear for 2 years saying that I thought gold would go to $2,500. And we were mocked. We were made fun of by people, said we were fools. I was called a shill. Okay. I was called every name in the book. And look at where the gold price is now. And let's go take a look at where the gold price is. And then we're going to look at some, well, you know what? First, let's look at some crazy stuff for silver, because this is actually quite exciting to look at. This one blew me away. I want to give proper credit here. This came from X, and it was a post from our good friend, the Gladiator. And he's a big account for silver and gold on X, 40,000 followers on X. But he said, if you just zoom out, you'll see a generational type move coming in silver. But there's a double whammy on this chart, guys, that I want to show you. And he says, this is where futures are made. Obviously, what we're looking at here, for anyone who's been in the basement for more than a week, is the cup and handle pattern. I'm going to draw it on the screen for you. This is a long-term chart of the price of silver. Probably goes back to, I don't know, 1970 or something. This is 1980. This is 2011. This is now. Okay, let's erase all of that. And this is the cup and handle starting in 1980, going to 2011. We made a cup, and this is the handle. Okay, now what's critical this year is that because these are 1 year candles, is that we end the year above this level. I think we're going to end it somewhere up here, okay, in the $50 to $60 range and be completely broken out. But what's double interesting about this chart, okay, we just looked at that long-term cup and handle starting back in 1980. Do you see another cup and handle starting in 2011 and going through today? Yes. It's like one of those Russian nesting dolls. It's a cup and handle within the cup and handle. And I think, everybody likes to talk about this quote unquote textbook cup and handle that started in 1980. And it's awesome. It's unbelievable. Yes, no doubt about it. But I would argue that we also have a cup and handle within the handle of the long-term cup and handle. And if your head's spinning right now, don't worry about it. Just think about one of those Russian nesting dolls and think about silver price going to levels that you can only imagine. The other thing about silver that we haven't talked about for a while is the gold to silver ratio, which is also acting in our favor. Let's get that pulled up here. Here we go. This chart, I want to give credit. I downloaded from goldprice.org. And what we can see on this in no uncertain terms, still unbelievable. What color should we use? How about green? I think green will stick out. for our viewing pleasure. This is a current chart, a 3-day chart of the gold to silver ratio. What that ratio tells us is how many ounces of silver it takes to buy 1 ounce of gold, and it is at still historic high levels. There we are right there, guys. Probably, we're just going to say 88. Yes. Let me ask you a question. Are you willing to trade 88 ounces of silver for 1 ounce of gold? Here's a beautiful Las Vegas silver round from our channel sponsor, First Mint. Are you willing to give up 88 ounces of silver for 1 ounce of gold? Don't get me wrong. You know I love silver. I just love this stuff. This is the most beautiful. Here, look at the back of this. The back of it, this one has like the roulette wheel. Look at that. Let me get different angles for you. Are you going to trade 88 ounces of silver for 1 ounce of gold? Again, I love gold, no doubt about it. But man, I love silver as well. And to think of trading almost 90 ounces of silver for what that tells us, the reason why I'm emphasizing that is the fact that that is a historic high ratio. Some people say historically it's been 50. Some people points, it's been as low as like 3 and 2. Right? But when we look over whatever, it depends on what period of time you look at. But no matter what period of time you look at, that's high. Let's just say we get to 50. Okay. And let's say we have a 33. Oh, I forgot to do an update of the silver and gold price. I'm sorry, guys. We'll do it right now. We'll do it on this. This is Kitco. There's the current gold price. You can't see that, can you? Why can't you see it? There it is. $3,338. If we divide that, and let's do this first, then we'll look at silver. But if we divide $3,338 divided by 50, that would mean that we'd be at a silver price right now of $67 per ounce. But what is the silver price right now? Oh, it is 38. There you go. Can you see that? There we go. $38 per ounce. Thanks to our friends at Kitco. What that tells us is when we look at the cup and handle, when we look at the Russian nesting doll cup and handle within the handle of the current cup and handle, and when we look at things like the gold to silver ratio, and when we look at the fact that the world has a silver deficit the last 5 years, when you look at the fact that output from silver mines is going down, how can we not get, where is he? There he is right there. There's the silver bear. We need to unblindfold the silver bear, which, as you may be able to see right there, his blindfold says $85 per ounce. Now, I want to remind you, okay, and a lot of you long-term basement dwellers know this, for years, the big bear there had a blindfold on that said $2,500 per ounce, and we thought it would never come off. We were crazy. Well, guess what? It came off. Right. And I don't think it's ever going back on, although I did keep it just in case. Can you imagine $2,500 gold? I mean, we can't rule anything out. And you know what? The big thing is we'd be okay. Right. Because we know long term, everything is beautiful. The dollar index is going down. We're going to spend about 30 seconds looking at that. Today it's up. But guys, we are still with the dollar index. Oh, wrong chart. Hold on here 1 second. There it is. There's the DXY index. And we got to get the right screen up. Here we go. We're at 98.24. Big up day in, stop moving screen. Jeez. Okay, there we go. 98.23. Big up day in the dollar index, right? 0.4%. That's a pretty massive move. But guys, and I promised you 30 seconds. We got to keep this in perspective. We broke below 100. Oh, wait a minute. I wanted to show you this. It's been a little while, and we're going to look at a 6-month chart. No, wrong one. How about 3 months? Maybe that's where. No, hold on. 6 month. Try that again. 1 year. All these charts, right? The dollar index is down. We attempted several times to get below 100, and eventually that happened. Here we go. This is the chart. I apologize. We're doing this live. There's 100 right there. Okay. I mean, remember we were bouncing around trying to get below 100 once. We almost tried twice, three, four times, and maybe two or three, whatever. The point is, we now are below 100 and still pretty handily below. It's going to take a lot to get the dollar index back above 100. Now, what I want to show you quickly, because this is where silver legends and gold legends are born. Okay. I can't resist myself. Don't get mad at me. Complain to Susie. Send her a message if you want to complain about me. That red line is right about at 100, as you can see. Okay, guys, the dollar index has barely been above 100 much over the last 45 years. However, what is so cool, where silver legends are born, is in this period right here, from about 2000, 2001 through about 2011. During that period, the DXY went down, okay, and the silver price, for instance, went from $5 per ounce. Hold on, we got some issues here, some connectivity issues. Anyway, the silver price went from $5 an ounce all the way to $50 per ounce. I wanted to pull up, darn it, I want to look at it. Let's look at something quickly. One more chart. We're going to look at the silver chart right now. We got you. There you go. We're on the right screen. Okay, this is a 5-year chart of silver. Just to put things into perspective, I know today's a down day, but just go back about 2.5 years ago and look at this trend that we have going in the silver price. Okay, we got to take stock on a long-term basis. Now, if we go and look at a 6-month chart of silver, right, what we can see is that since about June, so we've been about 3 months now. Let me draw some lines on here for you, make it a little more clear. Okay, we'll say about right there. All right, we broke above that level. This is in the futures, about the 35 level. And guys, we have been basically consolidating since the beginning of June. So June, July, August, 3 months, right? We've been consolidating in this area between that 35 and let's say 39 range, right about on average where we are right now. So we are looking good on silver. What's important to remember about that is consolidation is so critical to further upward moves, because what's happening is all the short-termers, all the short-timers, the people that don't really believe in silver are selling and being replaced by people that do believe in silver. It kind of washes out the weak hands, and it's happening in a way where the price is not dropping below those critical support levels. Let's go look at gold here real quickly just to see long-term what we've got going. Come on, gold. There we go. And okay, there's the gold chart. Again, we're going to look at let's look at the 5-year chart of gold. Does that look familiar to you? Oh my gosh. Again, what was this? From about the beginning of 2023, what is this? Over the last 2.5 years, do you see that trend? Okay, that goes right up to the sky, right up to the stars. However, let's look at a 6-month chart of gold. This is even more interesting. Do you see what I see on this chart? Okay, there's no doubt in my mind that this is so healthy. Man, look at this. Okay, this is the futures market from about 32.50, and we'll draw this line here, let's say around 34.50. Man, look at that. How the price of gold has stayed in that channel. April, let's see, May, June, July, August, for the last 4 months, essentially, right? And again, that is so healthy. That shows consolidation. People that went out, they're like, oh, gold went on a great run. It's not going to go any higher. I'm getting out. They've gotten out. As long as we stay above, when I look at this chart, that 32.50 mark in the futures market, we are in good shape. Now, look, guys, remember, I'm not a financial advisor. Don't make any financial decisions based on what I'm saying, but I can only see a brighter future for both of the metals. I mean, even if gold stays where it is right now, silver has a lot of catching up to do, massive amounts of catching up to do. I'm thinking by Christmas time, how do you feel about this? That we're going to be down here together celebrating $50 silver. Mark my word. I made a bold prediction, right, for April 1st of next year with the silver price, $60 silver. But I think I'm going to move that up to Christmas that we could see $50 silver. Let's see what Kitco's telling us, because the demand for gold apparently is changing. Things are getting very, very interesting in the gold market on a worldwide basis. Here's the headline. Okay. We got something to be scared about too. Silver miners are increasing their production. I'll to give you the reason why we don't need to be concerned about that. But global gold demand, we'll touch on that first, up 10% year over year in the second quarter. And we'll just go down here to the important part that I pre-highlighted. Global gold demand totaled over 1,000 tons in the second quarter of 2025, a 10% increase over Q2 of 2024. That's significant for the world's most valuable asset. Jewelry demand fell by 14% year on year. Yeah, because gold jewelry is getting so expensive, but investment demand made up for that, supported by solid bar and coin demand and a fourth consecutive quarter of inflows into ETFs. Bar and coin demand was stronger in most regions except North America. However, ETF holdings in North America rose. Okay, so the demand for gold and the demand for gold on the investment side, guys, look, everybody else is asleep. You're new to this or you've been knowing this for years, what's going on with the fiat money system. And the fact that investment demand for gold is skyrocketing only corroborates what we've known for a long, long time. Touching on silver, and I'm going to tell you why we don't need to worry about this. Turning to silver, Herarius noted that primary silver miners are reporting increased production during Q2 after a weaker first quarter. So the silver miners produced a little more silver in the second quarter. I got news for you guys. The silver mining industry, is not going to be able to keep up with the increased demand. This is live. I'm doing the best I can. The silver miners aren't going to be able to keep up with the increased demand that we're going to see for silver in the coming decade. There has been minimal investment in only the smart people, right? People like Keith Neumeyer at First Majestic Silver, Dolly Varden Silver, Silver Mountain Resources, Silver 47, right? Which merged with Suma Silver. But very few of these companies have been developing, right, or exploring or building new silver mines. When's the last time you heard about a big silver mine being made? Hold on, I'm going to have a quick sip of water. Join me. Okay. UBS Bank, the big Swiss banker, the big secret Swiss banker. Remember the secret Swiss bank accounts? We're going to listen to what they have to say just for 1 second about demand for gold. A little quick bit of a repeat, but UBS, the Swiss banker, says they're raising their 2025 gold demand outlook as investment appetite surges. They raised their full-year gold demand forecast following a stronger than anticipated buying trends, particularly within, like we just said, the investment segment. The move comes despite record high gold prices and a temporary slowdown in central bank accumulation. So this is very interesting. The central banks are not buying as much gold right now. However, investment demand is picking up. And if we look at this chart and we go over to the current year, 2025, right? The gold is jewelry down, okay? Tech about the same, barring coins about the same. But this, right here is where we're seeing the big uptick, and that is ETFs. Okay. The gray section, which is central bank demand, as you can see at the top, is down a little bit. So investors, big money, the smart money, right? The sovereign wealth funds, the private family office funds, the wealthy people, the Ray Dalios of the world, and just to name a few, are the ones that are moving into gold and supporting this gold price where it is. And I think going to be even higher. I think by Christmas, we're going to be sitting down here right now in the basement celebrating not only $50 silver, but we'll also be celebrating $4,000 gold. The bank now expects total gold demand to reach 4,700 metric tons for the year, a 3% increase over the previous year. And I think that's it on this article. I just want to bring, let's talk about the Federal Reserve, our old friends at the Fed, because as everything's falling apart out there in the world, there's a couple articles that were published over the last year that nobody really talks about too much. This one came from the Federal Reserve, and our good friend Jerome Powell, official reserve revaluations. And the reason this is important is because we get these other analysts, quote unquote, out there that are saying, oh, gold could be revalued to 15,000 an ounce. Gold could be revalued to 20,000. And we kind of dismiss them. But I think there's a why. I'm not speculating even, but why would the Fed be putting out these reports about official reserve revaluations? Just one paragraph I want to read to you here. It says, from the Fed, this note reviews the rare cases when countries used proceeds from valuation gains on gold and foreign exchange reserves. Over the past 30 years, only 5 countries have done so: Germany, Italy, Lebanon, Morocco, St. Martin, and South Africa. So the fact that they're talking about it even makes me maybe a little minorly suspicious. What do you think? But then we get this from the Philadelphia Fed, Federal Reserve Bank of Philadelphia. Lessons learned from the gold standard, implications for inflation output and the money supply. Now, this was a year ago, but still, why is the Philadelphia Fed, and there's a couple things out here, one paragraph. They said, when extending their analysis to the 2 large economies, they find preliminary evidence the gold standards stabilizing effect on prices. Well, go imagine that. If you back money with a real asset, it stabilizes prices. They also extend their analysis to evaluate policy interventions, specifically government subsidies to promote gold holdings, and find that these policies may enhance the long-run efficiency of the gold standard. Okay, the other big, I don't want to get too technical on you guys, but look, it's real simple. The more money they print, right, the less valuable it is. The more of this that's created, paper money, right, the less valuable this is. It's simple, right? And this, right, essentially can be measured by the M2 money supply. And the M2 money supply is absolutely exploding. Let's go out to the Silver Academy, who tells us of a silent tsunami. Why silver's moment is coming as the M2 explodes to $22 trillion. Record money supply, surging debt, and industrial demand are creating the perfect storm for a silver breakout. Okay, there's a chart of the M2 money supply. This comes from the Federal Reserve, right? Remember, they printed like 40% of the dollars during the COVID-19 crisis. And then everybody was like, oh, look at that. It peaked. Well, guess what? It didn't peak, right? It went down a little bit, but now it is shooting back up because we are in likely a debt spiral. Okay. So it's not just another number. What is the M2? The M2 basically measures like all the liquid money in the economy, and they can make this stuff electronically. Again, it just dilutes the value of the US dollar. And further, if we choose, let me look at you. We all make the mistake. Welcome to the basement. We all make the mistake, right? We value our silver and our gold. We use the US dollar as the unit of measure. Guys, I'm telling you, right? We should really benefit. We would benefit from valuing this in ounces. Same thing with gold, but we value it in US dollars, or we use the US dollar as the unit of measure. The more of them they print out of nowhere, right, and don't back it with anything real, the more valuable over any period of time the actual physical asset will become. It really is simple. It truly, really is simple. Okay. And now we got some of the people on the Fed talking about 3 rate cuts. Let's go to this. Oh, wrong one. Hold on. I had it somewhere. Here it is. Top Federal Reserve official says dour jobs data backs the case for 3 rate cuts. Okay. Michelle Bowman was one of 2 Fed officials who voted a week and a half ago in favor of cutting interest rates. And now she's talking about 3 rate cuts. Why? Why? I'm going to tell you why right now. You know, if you invest in precious metals, there's one secret thing that is your number one best friend. It's stagflation. During the stagflation of the 70s, the silver price went up at least 25x. 25%. 25x. And I'm going to give you 2 reasons why right now, right? All the data coming in. And then when we even think about the real data that we know the real numbers, what they look like, indicate to us that we're going to stagflation. First, I want to say thank you to channel sponsor First Mining Gold for supporting Ron's Basement, supporting my gold and silver content. They are a development stage company in Canada. They have 2 massive gold development stage projects, Springpole in Ontario and Duparquet in Quebec. You can learn more about them at firstmininggold.com. But the big mining companies are going to need to replenish their pipeline of big projects. And there are very few in the world in favorable jurisdictions. I happen to think that First Mining Gold is a company that can fit that bill. You can decide for yourself. As always, I'm not a financial advisor. Do your own research. But thank you to First Mining Gold for sponsoring Ron's Basement. Gold and silver can absolutely skyrocket in a period of stagflation. What news have we gotten in the last few weeks? What did we hear this morning, right? Which is temporarily putting a bit of a downdraft on the silver and gold price. We got news that PPI, the wholesale price inflation numbers, were way higher than expected. That is inflation. What is coming? Here's another little secret that nobody's talking about. We've yet to really feel, there's a big lag impact with these tariffs. We've yet to really feel the impact of the Trump tariffs in prices. Prices will be going up in the next 3 to 6 months, thanks to the tariffs. They're going to say, oh, no, there's no impact. There's no. No, they will. So we have inflation, guys, and we're going to have bigger inflation. We're also talking about needing to cut interest rates, which will also, if we do what Bowman said, that will light a fire under inflation. So we have inflation. Here, the best way to think about this is the stagflation box, okay? On one side, you have inflation. On the other side, you have recession. What did we hear last week? The jobs numbers collapsed. Oh, and by the way, the previous 2 months, there were 250,000 make-believe jobs that didn't really exist that we reported. I hope those people enjoyed cashing their make-believe paychecks, right? So we have the makings of a recession. We already have some form of stagflation right now. This guy hates it because there's nothing they can do. Okay, when we have stagflation, okay, if he wants to fight the recession, they have to cut rates. But when they cut rates, that makes the inflation worse. And then when they raise rates to fight the inflation, that makes the recession worse. And we've never, when we compare the situation that we are in right now in this country, right, on the early stages of stagflation, compare that to the 1970s. Yes, gold and silver skyrocketed. Okay, but what's different now, big time different, is back in the 70s, we didn't have this massive debt problem that we have. So that's even more fuel on the fire, right? That is going to just totally, again, if you choose to use the dollar as the unit of measure for the value of your gold and silver, that is going to totally destroy the real value of the US dollar. I don't like it. I love my country, and I hope I'm wrong. I hope I'm wrong. But I know how to use a calculator, and I know basic math, and I know basic economics. And guys, it is coming. Okay. I believe, again, could be wrong, as the dollar is diluted and diluted and diluted, and we're past the point of no return, right? There's only one thing that can happen. Again, if you use the dollar as the unit of measure for your gold and silver, and that is that measured in dollars, the value of that gold and silver will go up. It is the ultimate life raft, right? Right now, we are the people who've already gotten in the life raft on the Titanic. And we're like, lower us down, lower us down. Everybody else is still partying. They're up in the NVIDIA room. They're in the Microsoft room. They're in the Amazon room, right? They're up there partying. Jerome is spinning records on the DJ, but the ship is listing, right? And we're in the boat. We're saying, lower us down, lower us down. Do you like that analogy? I think it's a great analogy. And we got craziness going on. Let's talk about something crazy for a little bit. Said thank you. Oh, I want to say I got more to come, but for a while now, we've been getting some great support from this company, Dirty Man Safe. If you have something, I'm not going to ask questions, that you want to keep safe and secure, maybe you got a safe in your house, maybe you have a safety deposit box, but the ultimate way to keep things safe is what the pirates did, and that is burying it in the ground. And that's exactly what this does. The Dirty Man Safe allows you to have a secret stash that only you know about, and maybe somebody else, buried, like in your yard or wherever the heck you want to bury it. This goes into the ground. These things are so cool. And think about it. It's totally safe from fires, floods, anything, right? There's a reason why those pirates stored. It opens up, okay? It's very, very cool. And this is the smallest of them. This is the Dirty Girl, but it is super robust. They've got bigger ones, the Dirty Man, the Dirty Old Man. Great company. Oh, there's a discount code, Ron10, that you can get. Okay. You ready for Stranger Than Fiction? I mean, and look, I talked with Lynette Zhang yesterday, and she brought up a great point about President Trump. I'm not being political. This is not a political show. But she said something that really made sense to me, and that is that Donald Trump is an agent of change. Donald Trump is no stranger to controversy, big drama, big debt, bankruptcies throughout his life, okay? That's just a fact. And as we move now into this very delicate phase in the world economy and the world kind of geopolitical situation, be prepared, guys, okay? Because I think over the next 3 years, I hope I'm wrong, but we may have some big, big, big events. Be ready for some volatility, I guess is what I'm saying. And I mean, look at this. Along those lines, where is it? Oh, darn it. Here it is. Let's pull this up. I mean, he's going at it with the head of the Federal Reserve, you know that, Jerome Powell. But now Trump blasts Goldman Sachs CEO over tariff forecast, tells David Solomon to quote unquote focus on being a DJ. This is almost too funny not to read. This is what Trump said. David Solomon and Goldman Sachs refused to give credit where credit is due. Donald's mad because Donald Trump, our president, is mad because they had predicted the market wasn't going to do well because of the tariffs. Trump wrote on Tuesday post on True Social while lauding the revenue from tariffs and a stock market that's hovering near record highs. Everything looks good here on the Titanic. They made a bad prediction a long time ago on both the market repercussion and the tariffs themselves, and they were wrong, just like they're wrong about so much else. He's saying this about Goldman Sachs. I think that David Solomon, who is the CEO of Goldman Sachs, should go out and get himself a new economist, or maybe he ought to just focus on being a DJ and not bother running a major financial institution. So I guess the CEO of Goldman Sachs does DJing as a hobby on the side. I don't know. And finally, guys, let's take a look at this. because it tells us what's going on. This comes from our friend Make Gold Great Again. Silver equals money. And there's Vladimir Putin. Reminder, Russia is remonetizing silver. In 2024, Russia's central bank became the first in the modern times to announce adding silver to their reserves. Everywhere we look, we see indications that there will be solid support for the silver price as we move into the coming months, quarters, and years. We're going to go through it together. Okay, we are on this trip together, and we have been for several years. I feel like we're making a smart decision, safeguarding whatever extent you feel safe, part of our assets with precious metals. There's other things out there as well: land, commodities, cryptocurrencies. But a lot of the fear and a lot of the predictions that we're looking at when it comes to what we could be facing in both the near term and the long term can be alleviated by, let's say, assets that protect you from the potential devaluation of the fiat currencies. Okay, we talked about a lot today, guys. The dollar index is going down. We've got big demand still for gold. We've got big demand for silver. And when it comes to silver, it's just unbelievable. You know that whole story. I won't rehash it. But let's just say the supply-demand fundamentals now are crazy. And when we look out at what we can see coming, let's say a year, 5 years, and 10 years from now, it's only better for silver. And we know that the government, they're printing money like crazy. Okay, they're doing it right now. The M2 money supply is going up and up and up. If they lower interest rates, and it feels like the administration in Washington is shoving that down their throats, right? It feels like the Fed independence is in jeopardy at this point. It could just light a fire of devaluation for the dollar, but also inflation, stagflation, right? We know what that means. Right? I know one thing for sure. It's a big honor when you come down here and join me in the basement. Don't forget, you can subscribe to the channel. It's free. Okay. Leave a comment in the comment section below. Let's just say that not everybody agrees with me, and that's okay. That's how we can learn, is from each other, right? As long as comments are made in a spirit of kindness, a little constructive criticism, I don't mind. I've been on YouTube for 3-4 years now. Trust me, it's okay. I welcome the opportunity to learn from you and to learn from different perspectives. You're smart. Think about it, okay? Leave some comments in the comment section below. We want to hear from you. Most important, take care of yourself, be well, and I will look forward to seeing you next time.